I recently met with my investor dinner group comprised of economists, business owners, and wealth managers, and we feel that first of all, the Fed's going to continue to control inflation. And so we're going to be in this trading range because the Fed's going to continue to hike rates for longer. And we're probably going to be in this range from 3,700 to 4,100. We believe that the non-farms payroll will come in hotter than expected at 225,000. And we're believing that we're going to see a 50 basis point rate hike coming up.
Oh, so you already believe the 50 basis point hike is going to happen regardless of the jobs report, regardless of CPI next week?
Yeah, so once again, we're seeing that the Fed's going to have to control interest rates. And one of the things, a lot of people are saying that when they drop down to 25 basis points, that may have been too soon because we really have to control inflation. So moving to 50 basis points is what we're forecasting.
Very interesting. So despite what Jay Powell said, you already see it kind of baked in there. So I also want to talk to you about what we're seeing in banking. Do you believe there's systemic risk when it comes to the banking sector? Obviously, that's one of the factors weighing on the markets today.
Well, Frank, what we're seeing is that this is an opportunity to focus on companies with competitive advantage. And those are the companies that have leaders that's going to focus on the big bet. It's going to be companies that have success momentum, and also those companies that are building a moat around their business. We like European banks. You've spoken some of that today. We like a bank like Banco Babio, which is a Spain-based bank with primary markets in Spain and Mexico. Its competitive advantage is its digital transformation that's serving as a catalyst for efficiency and growth. It has increased its net interest margin by 49%, and it's returning value to shareholders at 6% dividend yield.
So it's interesting that you have a European bank pick. We're going to show. Can we show the European bank wall again? A lot of those stocks in the red right now. Is there one of those European banks that you would actually just stay away from?
Well, once again, we want to focus on those banks that are having that competitive advantage. For instance, Banco. So you have to be very careful. And also the banks that are really focused on their net margin interest, and also those banks that have really strong balance sheets. And we're seeing a lot of that in the European banks.
All right, we're going to get to your stock picks, too, as well, Degas. You got some interesting ones, I got to say. Some names that we don't really talk about very often. We just hit on one of them, BBVA. I want to get on another one in the logistics space. Ticker MANH, Manhattan Associates, actually a logistics software company.
Yeah, so Manhattan Associates, once again, let's look at this competitive advantage. The leadership of the company is focusing on its research and development investment into the tune of about 15% of revenue. And so what that has allowed it to do is build a moat of innovation. It has a cash return on invested capital of 81% and no debt.
All right, so you're focused on innovation. So let's get into your other pick. More of an industrial here, HEICO, ticker HEI in the aircraft space. So not necessarily innovation. Is this a play off our defense spending and things like that? Exactly.
It's going to benefit. Now, if you look at HEICO, the leadership has really focused on providing cost leadership with quality FAA-approved parts. In 1990, HEICO only had one FAA-approved part. Today, it has over 5,000 FAA-approved parts, and it has a cash return on investment of 31%. And so this is a company that we really like.